Let's just give you a sense of what we're talking about here when it comes to that market impact. You know, how big was this in comparison with other crises? This shows you, this line chart just shows you the FTSE 100. It's the main benchmark index of shares in the UK, and anything going up, obviously, is stronger. Anything going down is weaker. And you can see that we're starting here in 2016. So just after the referendum, you can see the market rose and rose and rose and rose. And you've had a kind of bumpy ride over the course of the last few years. But what happened in the last week? I haven't put that on. Let's add on the last week, the coronavirus impact. What's it look like? You can see a very big fall indeed. And actually, when you take that line and draw it back, that is the lowest that this market has been since all the way back here in 2016, the lowest that the FTSE 100 has been since the aftermath of that EU referendum. And to put that into context, what we're talking about here with this 1 week worth of falls, you know, how big is that in historical context? Let's look back all the way to 1984, when the market was set up, at all of the biggest falls in the FTSE 100 over that period. So you've got Black Monday, 1987, famous massive falls in the stock market that week in late October 1987. The financial crisis, of course, we can't forget the financial crisis of 2008. But actually this last week was the biggest set of falls in the FTSE 100, the UK's benchmark index, that we've seen since the third biggest that we've seen in the history of the FTSE 100, and the biggest that we've seen since the financial crisis, and actually bigger than the Euro crisis there, bigger than some of the other crises, some of the other weeks that we had during the financial crisis. So this is a historic level of falls that we've seen in UK share prices, and historic levels too of volatility. When you look at levels of volatility, this is it's called the VIX. It's a measure of just how volatile markets, not just in the UK are, but around the world. And just look at this. It goes from the start of last year, and just look at how much it has rocketed. That's actually the highest that volatility index has been in many, many years. I think it's actually higher than it was during some periods of the financial crisis, because it's really taken people by surprise. And that impact on the economy was one thing that Mark Carney wanted to talk about. I spoke to him just earlier on. Here's his response on coronavirus.
In isolation, we would expect that world growth would be lower than it otherwise would be, and that has a knock-on effect on the UK. We're not picking it up yet at all in the UK economic indicators, the survey indicators or other things. But if the world's slower than it otherwise would be, the UK's very open economy has an impact.
It's worth saying, since that interview, actually, Jay Powell, who's the chairman of the Federal Reserve, so that's the US equivalent of the Bank of England, their central bank, has also said it poses risks for the US economy. That's just in the last few minutes. But what does this actually mean for you? Well, the average adult stocks and shares ISA, so the savings account of the ISA, has over £10,124. Now, if you were invested in the FTSE 100 index, and with this week's loss of just over 11%, you would be short a whopping £1,144. So a big fall there, and that is going to, I'm afraid, affect many of our pockets.